Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So you can see gold is creeping higher, forming no bearish patterns on the lower time frames. So the retracement that we were watching for still can't start it, and market even can't prepare the background to let us step in. So that's why on the gold market we just could do nothing but still watching what will happen. But at the same time, you could see across the board, not only on the gold market but also on the forex market, that upward action is housing. So first impact of this news that actually what's going on right now in the Middle East, it starts to fading, and investors start thinking about the old problems, which is United States debt, coming CPI report today, coming Fed meeting in the beginning of November, and other stuff, and gradually returning back to understanding of the overall fundamentals. And that's actually Middle East events are not really improved the valuation in the United States debt, and doesn't improve the situation in the United States economy, not actually make any impact on the fundamental background. So that's gradual. These thoughts gradually are returning back. And this could mean that if conflict in the Middle East turns to some long term, that's actually could just become, for the West, it could become just a routine. So economic problems once again will become more important, and markets should return back on the driving by the fundamental factors. But at the same time, since the initial impulse was relatively strong, we are not exclude the chance that it might be compounding retracement. So yes, we will get our pullback that we're watching for, but we're not exclude that it might be some kind of the ABCD type of action, just because initial action here was relatively strong. And if we'll take a look at the 10-year yield chart on the weekly chart, you will see that there we have really significant bearish engulfing pattern on the weekly time frame, and that could mean that, as usual, engulfing has some continuation, and that could lead to appearing some ABCD action. Besides, gold market now is getting support on two sources. First source is the conflict in the Middle East. Second source is the dropping of the interest yields in the United States while the inflation is ticking up. So that's additional support. And the gold market, we could get even stronger upward action in years time. So we will see how situation will develop. By taking a look at longer time frames on the 4-day frame chart, now we're considering only 1895 area where theoretically the bounce could start. Market is slowing down the action mostly because of the oversold, but the 30% resistance already has been broken, 50% resistance has been broken, which was around 1878. So market now is standing higher, and the next level that we're considering 1895. So on the hourly chart, we have market slowly but stubbornly creeping higher. So you can see that this pace of the action slowed down, which makes us think that the impact is becoming weaker of the geopolitical events currently. But still, market is just creeping, forming no clear bearish patterns. We have kind here the butterfly. Reaction was just minimal. So you could see that market has shown just minor pullback to the 30% support and keep going higher. So from that standpoint, it makes sense just to consider nearest standing more or less significant target, which is the OP around 1890. And this OP, as you can see, very close to major resistance level, 1895 on 4-day frame chart. It's looking better. So right there. So this will be kind of the agreement, 1890, 1895, where potentially we could see some pullback. At least this is, well, more or less significant resistance that it makes sense to keep an eye on, especially if we will get some surprising jump in the CPI numbers today. So all this together could trigger the retracement. That's, I think, the level that we need to watch. So let's wait for the numbers and see what will happen.